Hey, Steve, welcome back. Hey, Andy.
All right, thank you, Scott. Hello, Andy. Hello,
Hello,
everybody.
Steve. Hi, Scott. Hi, everybody.
All right, pleasantries aside, yes, thank you, Andy and Michael, for filling in for me last week, last minute. I was off, took a great week, selected, I guess, a great week to take off to get a knee replacement surgery. But I was here watching on the couch in a horizontal position, watching the craziness of last week. And it's nice to be back, and we will kind of pick up where we have left off. There we go. All right. So welcome to the trade of the week. Without a doubt, the email that goes out once a week, and we go over some other items and ideas and how to use Trade Ideas software. And I've got a few ideas today for how to use the software in the current environment in which we find ourselves right here, right now. So we'll get to that. But before that, just the disclaimer. This webinar is not to be construed as financial advice. We're not licensed to give financial advice. Anything you see or hear, it really is just an opinion, just like the trade of the week. It's just our opinion using the Trade Ideas software. So we've got some available as possible live throughout the day, especially during the market, whether it's Barry's room. Barry's room is a free place to hang out. He likes to call it a live trading room, not a chat room, but they do a lot of quality chatting in there about the markets, what they're following and stocking. And then Barry is very generous with his time in demonstrating the software and even helping people if they ask a question. So we're migrating to a format that allows us to kind of grab the reins as Barry takes a midday break. And one of the four of us or five of us, other traders here, will host the 12 noon Eastern, Monday through Friday. It's kind of like our old Friday support session used to be, but we're just keeping it simple. 1 hour a day at noon Eastern, Monday through Friday, and somebody's going to be there. And all you have to do is click into that live YouTube link. It's super convenient if you're getting stuck at the doctor and they're 45 minutes behind schedule, like I've seen the last few times. It's always nice to have something to click into if you're available. So diverged a little bit there, but the point being is we're here and we're always trying to make it available to you guys to have access to get a hold of this very robust program that has a lot of rich features depending upon swing trading or if you want to be a fast-paced trading animal. All right. Thank you, Christopher. Welcome back. Grand Theft Auto can be hard on the thumbs. There goes a jet the minute I start. So the TI University is now has been replaced with, as you see here, a new slide, the daily support sign. One of us will be. So set a bookmark reminder if you're easily adept at using notifications and push notifications and things like that. If you have the YouTube app on your phone or whatnot, or just the YouTube bell in general, and you want to be alerted, pop up, hey, Trade Ideas Live is starting, and it's a real nice way to interface and join. We've seen a tremendous uptick in attendees from that. All right, so that brings us to this week. Some ideas I'll talk about this afternoon here. See how long I can go with the new knee, but so far so good. Man and machine combined. We are the human beings. The machine is our Trade Ideas platform, whether it's the AI, Holly or Neo, or any of the ones that are generating ideas for you in real time. Really good entry ideas. That's where the value is, and then the human being kind of takes it from there and does the real-time management. That's the way we like to do it. It's the way we've seen the best success with people doing it that way. We call that the moderate mode. The conservative mode in the AI is getting in and out without having to make any decisions. Now, I understand that can be a rather attractive proposition for people who don't trust themselves and who have maybe touched the hot stove a few times in the market and lost some money and certainly don't want to have the pain of dealing with the decision they made again. So it's a nice alternative to have the AI serving up ideas. But what we're saying is the AI is serving up great ideas. It really is still should be up to you to manage those ideas. Don't turn your back on the machine. So the human and the machine combined are where you're going to get your best value, whether it's, like I said, the AI or making your own scans. Regards to the couch time gaming. Yeah, friend, I was more, I'm not a gamer, I was more watching the market game in real time with my laptop and whatever I could muster. All right, so what we're going to talk about a little bit, market recap, certainly tons to talk about. And I kind of add this little exclaimer here, now what? And so that's going to be kind of the theme of what I want to show you, how I'm looking to use trade ideas going forward here in the next week. So let's do that. We'll take a look at the market recap. Andy may have some thoughts on the AI. If not, that's okay. We'll talk about the trade of the week, this week and last week. And then don't want to get ahead of myself, but we're going to talk about something called the pocket. And that's where we find our price action right now, in the pocket. I'll touch on that in the market recap, but we'll get to that. How to navigate the pocket? Well, I've got some ideas on some scans we might be able to flip upside down and see if we can find anything from there. So let me minimize all that, and let's bring up, I'm going to start with the NASDAQ this time, because this was what I was talking about midday as having the most clean chart out there. The Qs bounced off the 200-day moving average perfectly on the Friday of last week. Blasted through the weekend, you guessed it, right at the, so the Qs have given us a really nice, neat, tidy, that was not nice, neat and tidy, there we go, a nice, tidy bracket here, bookends, if you will, from which we can trade. And I think this is our new established range. It only took us 3 days here to establish an extremely volatile range, but that's what the NASDAQ seems to be showing us. And I actually looked over, I was in some other simple ETF, not doing a whole lot this last week, but got on the right side of a couple little moves here and there and flipped the hat today, because I looked over and I saw that the NASDAQ had fulfilled its mission, meaning it bounced up into the pocket. Okay, what is the pocket? Well, the pocket is these moving averages rolling over, or a trend line it could even be, but usually it's going to be the momentum line, the fast line that I talk a lot about. And it's where the price gets hung up. It's the area in which the net grabs the price and says, well, hold on there a little bit. So we saw that today, a perfect touch right on the declining 10 period. We hit that pocket. And so it was when I noticed that, I kind of flipped out of, flipping meaning selling a bullish 3 times ETF, and then got long not too shortly thereafter, the VXX. Just trying to play a range here. I'm not really trying to think 3 steps down the road or the bigger picture. I'm just trying to kind of picture the volatility that we're going to have being batted back and forth here. And the Qs really kind of gave us the areas of which the price action was being batted back and forth. So that's what I'm watching, the Qs as a leader. And I also spoke today about what the bulls really needed to see today in the S&P land, looking at moving averages a bit more messed up over here, because there's no real definitive bounce on the S&P other than that level back here back in October. So a nice move up, took out yesterday's highs as well, but didn't quite get to the declining 10-period moving average. And it doesn't always need to touch it, but this again found itself in the pocket, so to speak. And after a big vigorous bounce, some of the biggest bounces we've seen can be in corrective type markets. Big 2-day bounce here was stymied right at that declining moving average. Again, I'm going to call that the pocket. But what I had mentioned midday, somebody was asking me for my read on the S&P, and I said, well, let's just keep it simple. What's the #1 goal today that the bulls are probably going to want to see in the S&P 500 SPY? And I claimed that I would think a move above that 200-day and a close above that 200-day would be nice. And anything below there or closing on lows below there might not be so nice. So we'll see how that works out. Looks like we're a little bit lower in aftermarket here. But the point being on this particular idea that the closing claimed that and kept that, well, then we could have been talking about kind of like the NASDAQ had, a 200-day base with a declining 10 period and a pretty tight range there. So a little bit of sloppiness going on over there in the SPY. Now, the IWM, the Russell 2000, has just been very difficult to peg. It's been weak at every step. It won't bounce with vigor. It's the first to want to roll over and puke and give up. Can't even get the Russell 2000. This thing is the weakest, once again, the weakest of them all. And if we want to go around the horn a little bit, in the Treasury market story of the day, half point basis, not so that in itself is also very bearish. So 2 things that are not giving me a lot of confidence that that bounce is going to hold. I think we might go back and possibly retest that low from a few days ago. One being we bounced right up into the pocket and failed, and not only that, we failed right here as the Fed was announcing that to put the Qs up. The Qs actually touched that moving average on the news of the basis point cut and was rejected, neglected, and faded from then. So that is a very ominous tell as well. Don't like to see that if you're looking for higher prices soon. So the only safe bet I think that we're going to see soon is continued volatility and what you can control. If you don't want to play at all and just sit in cash, if you do want to play because it's fun when the volatility is big, you have to select smaller share size. You need to select a surfboard that matches the swell that's going on out there, so to speak. I'm not a surfer, but they're fun analogies to use. So if you're normally playing 500 shares of a $50 stock, well, play 200 shares, 250. You're still going to get a lot of crazy movement. Me and the guys have seen it in these types of volatile markets. I prefer to just stick to the ETFs. In the last week, I've been in SQQ, I've been in TNA, and I've been in VXX, and they've all worked for me the way I wanted to. Didn't get as much on a couple of them as I wanted to, but I just like to keep it simple when the market's this crazy and not focus on individual stocks, focus on volatility ETFs, and do it with much smaller size than you normally might do anyway, because the moves, they come quick. Anything else you think I need to talk about, Andy, in terms of the market? We talked about volatility and down share sizing to adjust. Anything you want to add?
Yeah, I mean, the volatility is usually when it's like stretching a rubber band and really pulling it back. When you release it, it's going to reverberate back and forth several times. And if you scroll back in the spiders or the Qs, you're going to see the action we saw several months ago, where things got well. I guess you may have to go back to the end of like December and things like that, but I'm not seeing a whole lot right there. If you'll zoom back a little bit more. There you go. There you go. There's some action right there at the end of 2018 where you did so, and you can see once we started breaking it lasted. There you go. Perfect.
Look at that 200-day moving average.
Several months of volatility. So I wouldn't be surprised to see this type of volatility go on for some time. So as Steve was mentioning, you got to be careful because this can go on for a while. Especially in those declining volatile markets like you saw at the end of 2018. We could see something very similar to that. So you might have to, strap your seatbelt in for a while. And I'm in and out a lot in situations like this. I did real good on a Twitter long that I bought on Friday and tried another stock here recently, ended up getting out for a flat today. Saw that it wasn't working. I was afraid this market, and it was a good out, yeah, so these are the types of markets where I'll just play maybe one, like Steve's playing ETFs. If I do play a stock, it's only going to be one at a time, maybe two at the most. No reason to get loaded up in a bunch of different instruments, that's for sure. Just kind of stick and move.
Exactly.
Yep.
All right. Well, there's nothing left I have to say about the market. It's volatile, and keep it simple out there. And if you want to take it over and talk about anything that you saw in the AI today, that'd be great.
Okay. Well, we definitely saw one trade today in the AI, and hopefully some of you guys out there caught it, and that would be in the form of OMER. I just have up NEO, and like Steve and many of the others here, we're kind of been focusing on this. This is a segment that we released around November of last year, and it's been doing pretty well. And yeah, my focus has been on it because I think I like the strategy involved here, where we're looking for stocks that are doing high relative volume. They can be more volatile, but at the same time, when you do get a mover, they can really move. Example, OMER today. And this is the one that was called out of the gates at 8:35. And you can see right there, probably would have been tough to catch in the early going, but still, even if you had to chase it all the way up to 15.50, there's still a lot of meat left on that bone as it continued to run throughout the day. We have found out that these work better in moderate mode, where you let them work for you and let them work all day for you. Obviously not always the case in every stock, but in what we're seeing in the back office is when tested over and over again, it performs much better in moderate profit. In other words, holding these until the end of the day. versus taking a quick scalp in conservative mode. Which brings up a good point. There wasn't a whole lot of trades today in Holly, only a couple of good ones. You can see the other strategies here not performing very well, not horrendous, but just not doing a whole lot and not that successful in what she did do. But the other one was MITO, which was also an early morning move. So there's your signal right here. And small price stock, had some nice move to it. And this is one that if you try, if you try to hold in moderate all day, you basically got out for a flat. So getting back to my point, it doesn't always work. But over time, if you were to, buy or short these and hold these trades, till the end of the day, you're going to realize a bigger profit than you would just by closing it out. Which brings up a great point. I got an email today from a guy who said, I can't remember the amount of time, but I've been trading, paper trading the AI, basically all of the signals, trading every signal, and he was saying his profit. I'm not profitable. In other words, he was down a little bit, and he asked, what any pointers you might give. And I said, well, yeah, sure. This is the whole idea. This is the great thing about the paper trader. It's yours to play with, and you're not limited to how many trades you can make. And so what people need to do is experiment around with it, and even with the AI. And the advice I gave him is, well, maybe do this. Maybe wait until the after 15 minutes of the day, 15 to 30 minutes before you turn it on. And maybe just don't turn on every strategy. Maybe get a feel of what the market's telling you. Is there a long bias? Is there a short bias? And decide which strategies you want to put in play. Now, if you go into Barry's room, they're really great at not auto trading these. In other words, taking a look at them and just boom, right click and trading from the charts. Okay, that can be done real quickly in our system. So an auto trade, it may take you 3 to 5 seconds longer. You may miss a few cents here and there, but don't feel like you have to come up here, hook up the auto trader and let it run. And if you are going to do that, experiment around with different styles, different limit offsets, different strategies. Maybe do long strategies when you have a feeling for stock going up that day, and do short strategies when maybe it looks more of a bearish tape. So I think that's the correct way to use it. And there's other things you can do. Like I said, you can, if you're experimenting around with a limit offset of like 10, maybe you come in here and you do a limit offset of 5, and find the strategies. Steve and I like these. We didn't see any of them today, but these pullback longs and pullback shorts can be some good ones. Okay, but take it and experiment around. Do different things with it. Don't just try to come in and cut it on. Let all the AI run and see what it's like at the end of the day. I mean, you can do that, but then take it from there and experiment around with different strategies and different styles. But yeah, as far as the trade today, those are the only two to talk about, and just making sure this is not a question about the AI, and it doesn't look like it is.
All right.
Okay, all right, Steve, I'm going to shoot it back to you. That's about it for the AI today.
Very good. All right, so cool. I'm going to bring up my other chart. I'm going to do something here real quick. An indicator. I'm going to add an RSI. I want that indicator RSI to be a 14 period, because some of you may have rays were being made in classic, even bigger, more egregious right here before the big sell-off, coming off a lower high in the RSI reading. So there's less oomph in the push of the candles as the price closes higher, but they're doing it with less energy. Look at that divert. I mean, JC was certainly patting himself on the back, and he rightly should be, because he caught it as well, and he had his newsletter people out in front of this, kind of like I think Andy and I did for you guys about 3 weeks ago. So for the regulars and Friend and Christopher and some others that are here a lot, we talked about this and we said, I don't know what's coming, but this just doesn't feel good about being extremely long up here in these levels. Also, if you're just short and you're waiting for the bad news to come, well, that's not a great strategy either. But hindsight sure is clear when we're able to look back. And boy, that was quite the mother of all warning signals when we talk about bearish divergence. And so I bring this up because this is the trade of the week. And this was the week that I was taking off and going in. I could not find a single thing. And I'll just actually back it up and show you. This is where we were. We were right there. And I said, no, this just doesn't feel right. I'm going to say go to cash. I'm going to cash, but not just for my personal reasons, but there was just nothing out there that looked worth putting a risk on at these high flying levels. And zoom in and the rest is history. We know what happened from then. So yeah, I'm going to take a little bit of a victory lap and a little bit of a humble brag and hope that maybe some people out there saw that and read the article and the email and it made sense to them. Maybe it made them back off the accelerator a little bit. I'll go with that. Because, I don't really get feedback on these things, on the good ones anyway. Certainly do on the ones that don't work out, but that's just human nature, and we all have a good laugh about that. So revisiting the trade of the week from 2 weeks ago, cash, that was the reason. There was just nothing that was showing up, and we had been talking about these indicators kind of showing some bearish divergence. So let's clean that out, because the following week we had to come up with something. We didn't have to, but we did, assuming that the market would cooperate. Let's get rid of that RSI. So what I noticed in the bounce of, let's call it this day right here. There it is, this day right here, Friday, the Friday bounce. I'm going to go to the NASDAQ for that one. The Friday bounce and the Qs had the biggest vigorous bounce off of the oversold low that we had. And of that sector, the semiconductors had the nicest sector within the heat map of that day. So going into the weekend, a lot of volatility out there, and a simple idea was to just try and hook your horse to where the strength was, at least for the prior 2 days. And if the market did want to continue to bounce up and move higher, let's go with the horse that looked the best coming out of the far turn, which was the semiconductors. So I do believe we had a trigger yesterday in the semiconductors. The price did trigger and has pulled back a bit since. But I believe the play is still, for the most part, in there. Let's take a look at on the other chart what the moving averages are. Yeah, we can see that same thing happen in the semiconductors that happened in the NASDAQ. The old 10-period moving average just doesn't give people a lot of incentive to want to take new, fresh buying positions after a big bounce up into that pocket. But let's see what happens. There could be a few days of digestion here, and wherever the market goes will probably dictate the SMH. But the SMH was not really an easy one to come up with either. So again, the explanation was in the email there that we're really just looking to kind of work backwards and reverse engineer what was the strongest technology. What was the strongest of technology? Semiconductors. Okay, well, if we have any follow through off of that big bounce and it does become a low, in hindsight, we won't know until that happens. But if that does happen, then that's where our focus was. Nothing more, nothing less than that, really. That was the thought on that one. So kind of an audible the last 2 days. We are talking about man and machine, human and machine. The cash idea certainly was not spit out from AI Neo. It was an idea from a human, and the semiconductors, SMH call, same kind of a thing. Just trying to find some simple logic without trying to go to just one crystal ball type scan, which, by the way, doesn't really exist out there. All right, so that was the two trade of the week ideas. Let's see if there's any. What indicator is better to swing in actual volatility? Not really sure how to answer that question, Riker. What indicator is it better to swing in actual volatility? I don't really use any indicators other than my 10-period moving average to tell me if the momentum is intact or if the momentum has subsided.
Yeah, it's true. It's really tough to tell when you get volatility like this when your turnaround's going to be, and Steve's right, other than and you got to be careful guessing. as far as if you do hit one of those indicators that the price is just not going to bolt through there. Like Steve was kind of patient today, but
I was patient. Excellent.
you know, well, yeah, you
Yeah.
watch the rejection first, you know,
Yes.
before you just
Yeah.
load up on the short side right at the top of the market. Yeah.
Watch the event and then see how the reaction to the event was, and then go from there. And my most important thing is that it lined up technically to do something technically. So let's talk about technically. We're talking about the pocket. That's where we are. We are in the pocket after a big precipitous fall off, giant bear market. I'm not gonna say bear, giant corrective market bounces, which we saw Friday and Monday, right back into the pocket, and that is this general area right in here after a big bounce. Just do me a favor, don't be taking new long positions in this area. If you're going to do anything, sit back and wait for the price to reclaim that moving average, and that moving average might flatten out, and this is 6 to 7 days down the road, and then maybe there's a reason to get long if it climbs above and holds above that moving average. But the real play, I think, in this market that we have right now is to try and flip things upside down and look at these as short selling opportunities. Because if you're a short seller and you're waiting for the price to break down, sometimes let's use this as an example back here. We'll just waiting for the price to break down, you short and it just zips right back up. Sometimes the best way to short sell a market is not to wait for a breakout. There may be a time for that in the future, but certainly not in the market that we've had lately, the buy the dip market. Shorting new momentum lows doesn't work. It's usually the trap in the beginning of the reversal to come in and buy. But now we're kind of flipping our head upside down, our mind upside down, looking for the opposite type of trades, where the longs have run out of steam and maybe the path of least resistance is just a roll back over to test these lows. I kind of feel if I have to put my head on anything, my hand on anything, or gun to my head, I do feel like we're going to come back and test these lows respectively in the Qs and the NASDAQ. And then S&P. I just feel like it's going to happen. You can't jam through this much volatility without a couple of retests just to make sure. It's not one and done, hey, the skies are clear, the birds are singing, and everything's good again. It's going to take a little bit of stormy weather here, and I think we have a date with those levels. So this becomes the level of interest to establish some shorts. So there is the big leap. How do we use trade ideas to adapt to the current market conditions, which I am claiming is we're in the pocket. And there's 3 trades. We can go short, yes. We can go to cash, sure. Or we can try and establish a new long and hope and pray that the price finds its way through these, gets a machete and finds it's likely, and I'm not interested in that one. So I'll answer Chris's question before. What was the volume today's close? You're talking about the S&P? Well, the NASDAQ was 3 times relative volume, and the SPY was 3 times relative volume. So both had serious relative volume. Into the close, if larger than negative, that likely set the tone for Wednesday. What I usually notice, Chris, is these bounces can be short-lived, and they can also be very easy on the volume. They don't have to be heavy volume, and if anything, they probably volume dies out on them, which just confirms that interest is dying out, certainly for the long side, and get ready. So what I want to propose is how do we find setups that might look like the NASDAQ, where we can come in here and be alerted as it's close up at the higher end of that range and look to go short. Well, for those of you who've been around for a while, we have this scan Andy created called pullback to the 20 SMA or pullback to the 50 SMA, which would be a great type of scan to look for days like this pullback to the SMA. If I can find another example a little bit farther back, probably. Yeah. But the point being is we're going to reverse this and flip this upside down. We're no longer looking to buy the dips. We're looking to sell the rips, at least until things might change. In order to sell the rips, what we did is we took the pullback to the 20 and we took the pullback to the 50. And we go to configure. And these are topless, so it's just filters. And I clicked the flip button. And when I did that, everything became inverted and gave me this. So let's take a look at a few of these here. What I'm looking for are stocks that have bounced probably a couple of days up into the pocket. Let's just see what we can find here as we do it together. Yeah, interesting. That's a decent looking one. I love like 2 days green and then a red with a wick at the top. The wick is usually the one that tells us selling is starting. That one's not bad there. It did close above that 10 period, but I'm only going to stop on the ones that look really super good because obviously there's a lot of scans in here. What is this? Logitech. That one I like. See, we had a gap down, came back up. Not only did we trade back above that gap, we traded above the 10-period moving average, put in a topping wick, and we fell down. So here's where I'm going to start to combine the last two elements of the webinar here. As we go through, we talk about the flip button. We're going to set some alerts from those flips, and then we'll hand those out. And then when we have a few, we'll bring in Scott for some more announcements. So here's the first one. We're going to go ahead and set Logitech again, right about there. And again, I'm going to go short. The idea here is to not wait till it gets down here and breaks new lows. We're not looking to short down here. We're looking to anticipate and fade this bounce. The bounce is in a bigger picture of a downtrend. The moving averages are all crossed over and suppressing the price. And this price bounced right into the pocket today, and it will probably trigger tomorrow if it takes out today's close. Let's see what else we can come up with. That's not bad either, but can't do them all. Let's find the ones that just really look too good to be true. Oh, this one, it just triggered. How about that? So let's move that down just a skosh and reset that. All right. And we'll have a couple more we can look at. Then we'll flip. Oh, this is a good one. I like this one a lot. All right. So a nice 3 or 4 day bounce and a rejection candle right into the 20-day moving average. We'll just use the intraday and set a short on that one. So there's a couple, again, went to configure. And there's really nothing special here about them other than they're just alphabetized. So let's take a look at a few charts and see if we like anything. I'm going to try and stay away from pharmaceuticals and things like that. That looks a lot like our market. That's because it's a fund. Looking for something that maybe has not stretched too much. And there's going to be some duplicates on here that were also on the 20. But I'm pretty sure we can find one more really good one here that just, well, it's not bad, but we already did that one. Low G, I like that. So we're getting a lot of returns here, but there's only so many that I really like looking at. This one doesn't look bad here. MUSA, not a lot of volume though. I'm going to stay away from that one. 500,000 shares just isn't a whole lot of volume. And oh, that one doesn't look bad. Let's go back to that. This was ONE. Not a lot of volume. 200,000 is not going to cut it. So I think we're getting to the bottom of the barrel here. I think Christopher has a question. Let's take a look here. Let's see if I don't find anything else. Kind of thought I'd find more than we did there. All right, Christopher, if I came across something on Twitter that has me thinking all these machines and algos, they learn as they go, been buying dips for years. What happens if they learn to sell the rips? I'll tell you exactly what will happen when they learn to sell the rips. They're just going to do the same thing. They're going to invert their strategies, and then stocks on the open. We've talked ad nauseum about how they do the jam down on the open and they try and shake the trees and get everybody to sell their stock. They're going to do the exact opposite. They're going to make the they're going to appear to have strength early on in the morning. So big green bars in the morning will probably be quickly reversed by 30 minutes into the day, and then starting to make new lows. Just the exact same thing I'm doing here, but they're going to probably flip it around too, and it probably won't take them long, Christopher, to learn that the market has changed. That's the new environment from which they should start trying to make a buck or two in the algo land. So
I got something to add to that as well. I was talking, I was doing a one-on-one with a guy today, and we were looking at the gappers and all the big gappers this morning in the pre-market channel. Just go back and take a look at those and look how many gapped up and just got slammed all day. And that's the kind of action you get. Actually, Steve's going to do it and start taking a look at them. Just, I mean, you're not seeing it. Yeah, not a lot of times you think, look at that one, just Omar, that was a good one. That was the
yeah.
But you're seeing a lot of them just didn't really.
Gap and crap. You're gonna spit
Gap
up
and crap.
some
You did a lot of them. Not too many of them gapped up and went higher. You'll start seeing a lot of that if the tape remains, bearish.
But it'll be the jam up. It'll be the jam up morning where they
well, that too, yeah.
They feign an interest in buying, and everybody gets excited, and then it becomes quickly reversed. That's what I will predict to start happening. It's happening here after market, not too much, but we're definitely in a news-driven market, and in a news-driven market where it seems like everybody's waiting on pins and needles for the next bit of not so great news. You're really you got a tough sell trying to sit here and find a reason to go long this market. I firmly feel that until things shape up. But I'm basing that on a lot of things, but primarily, as usual, the price action. So anything else you want to add, Andy, before we bring Scott in?
No, it sounds like.
All right. Well, that's all I got. And let me bring in the right slideshow here. Cool. All right, Scott.
Yeah, items on the way out. We do authored by Abe, so check it out. It's got a lot of good tips on how to take advantage of earnings season. A couple strategies in there for you to add to your layout. Trade-ideas.com/earnings. Go there, get it. We've got a podcast. We've had some new episodes out already this year. Go check them out. Just search for Trade Ideas Podcast, and you'll be ready to catch the next one as soon as it's released. There's a code. Some of you were asking for a discount in the chat. There it is. Springtime, all caps. It's good this month. It saves 15% off your first month or your first year of Trade Ideas. Those of you that are on standard can also use this to do an upgrade to premium and save the same amount. You can find Steve on Twitter at Today Trader. Also follow at Trade Ideas, at QuantBot, at Bonepara, at Dave Mabe. There's a whole bunch of others, but if you follow Steve and the at Trade Ideas account, you'll see the other ones. Facebook.com/Trade Ideas Pros, the Facebook page to follow and share stuff that we post with your friends. Info@trade-ideas.com is the best email address. That's actually the best place to contact support. It goes into our help desk software, so it does not get lost. It gets assigned to the appropriate team member. All that good stuff gets you taken care of. We'll have a recording of this up later on tonight or tomorrow and send you an email update when it's available. Thank you, Steve. Welcome back again. And thank you, Andy.
Thanks.
Have a good one.
See you guys next time.
Later.